2 years ago, I was barely profitable. I was using complex strategies like ICT and SMC and spending hours analyzing the charts. But then I discovered one simple strategy that helped me generate over $200,000 in profits, all by only trading 45 minutes each morning. It doesn't require hours of complex analysis or learning hundreds of different concepts. It's a completely new strategy that only requires you to look at 2 different time frames. But the best part is that it's completely repeatable. In fact, in the last 30 days alone, I've used it to make over $38,000. And being able to consistently do this on a month-by-month basis has been completely life-changing for me. So in this video, I'm going to give you a complete rundown of the full strategy, and I will backtest it over a week period so that literally anyone watching this can copy me and finally start to see results from their own trades. So the first thing you need to know is when we trade this strategy. So setups for this strategy take place within a 45-minute window between 9:30 a.m. Eastern Standard Time and 10:45 Eastern Standard Time. This is the New York time zone. The pair that I trade on this is the Nasdaq. So let's get into some basic concepts first. With this strategy, we only consider 2 different time frames, the 4-hour for direction and the 5-minute for entry. So let's begin with the 4-hour time frame. On the 4-hour, as I go from right to left on the chart, I'm specifically looking for what I call a V-shaped reaction. I want to find an area where price pushed aggressively into and then pushed aggressively out of, creating a V shape. Let's have a look at a real example of this on the charts. And as you can see, price created a clear V-shaped area where price aggressively pushed into and then pushed away from in the opposite direction. You can then use these V-shaped zones to draw on your 4-hour support and resistance areas. We draw this from the wick to the body of the candle. These zones serve as a guideline to frame my trade entries on the 5-minute time frame. They are there to make sure that if I'm entering trades on lower time frames, that I'm not trading into a brick wall that is then going to turn my trade against me. Next, let's have a look at the 5-minute time frame, which is the entry time frame. So first we have to identify the 5-minute range we are looking to trade from. The way I do this again is by identifying potential V shapes that happen from right to left. I then measure the gaps between these areas, and this determines how much space I have to trade within. Based on if there is enough space between our zones to enter a trade that is at least going to get to the break-even point, we can then start to use those particular zones with enough space as our trading range to trade from. Next, we observe the 50-period simple moving average. You must select simple moving average when you are adding this to your charts. Now, the 50 SMA in this particular example has been trending upwards from Tokyo session onwards, which means that it is trending bullish. Additionally, one of our hard rules is that if price is above the 50 SMA, we can buy, and if price is below, we can then look for short positions. This is a hard rule and it has to be adhered to at all times. Let's have a look at entry criteria for this trade strategy. For entry, I'm simply looking for price to break and have a single candle body closure above or below our zones to confirm that we have broken out. We then wait for price to come back and retest that 5-minute range, and then we enter using a 25 pip stop loss maximum, and we use a 1-to-2 risk reward ratio. Next, let's hop onto the charts and backtest a week's worth of price action so you can see real examples as well as see the strategy play out in real time. All right, so let's have a look at some of these trades taken on a week's worth of backtesting. All of these trades were taken live, and we actually have recordings of it. It's in the description down below. You can join our Discord server where it's all recorded, and you can stream live with us every single day for free. So just click the link and you'll be able to join over there. So let's have a look at this first trade on Monday, the 3rd of February. Essentially, what we're looking for again is starting on the 4 hour. We can see that price has clearly created this V shape over here and over here. Okay. And so we're going to draw out our zones there. This is just a framework for us to trade within on the 5 minute. Okay. So currently we are over here. You can see that based on this, we still have space to trade down and space to trade up. Okay, we just want to be mindful of those zones so that we're not trading straight into them and then price reverses on us. Okay, so we're now going to drill down to the 5 minute time frame where we're looking at our 5 minute range. So as you can see, price is pushing up, and you can see that price pushed up here and pushed down, pushed up, pushed down. What do we notice right away? Well, there's a level here and there's a level here. Okay, clearly. There's not a lot of space here for us to get into a trade, so we're not going to do that. Plus, we've had price push already way past that, and we're now breaking out of here. Okay, so this now becomes our zone, the top of our range. Okay, we're not going to mark out the bottom because we're not anywhere near that. We're currently above the 50 SMA, and it's been trending up for quite some time. Okay, so that's all very good signs. One thing to note though is that there's a big gap here. Okay, and price could want to come down and fill that. So that is one thing to keep in mind. However, this is a valid trade. So we've broken out, and the candle, the 5 minute candle, has broken and closed above, and now we're just waiting for price to come back, tag us in, and continue. Okay, so what we would then be doing is looking to hop in down here with a stop loss of roughly 25 pips and a take profit at 1 to 2 risk reward ratio. Okay, then we would be looking to go break even at 1 to 1 risk reward, which will be roughly here. Okay, so when price gets to here, we're then going to put our stop loss at the entry point. Let's hop down to the 1 minute just so we can see each individual candle. We enter on the 5 minute, but let's have a look at how price plays out on the 1 minute. You can just see it in a bit more detail. So price comes, tags us in, pushes down a little bit, okay, and then it pushes in our favor. Okay, we've now tagged on. In this candle, we tagged the target for break even. We would put our stop at the break even point, and then we get tagged out at break even. So this is a break even result. No profit, no loss. So let's hop on to the next day worth of price action. All right, so if we have a look at the next day, which is February the 4th, Tuesday, we have the same 4 hour zones. We are still within the same 4 hour range. We're currently over here. And so we can currently go for buys. There is enough room there for us to go for buys and for sells as well. Okay, so let's hop onto the 5 minute and again, look for the same thing we looked for yesterday, right? So we're looking for price to either break up or break down. So the zones we're looking at is pretty clear. With this, you can see price pushed up like this and then pushed down. We've got a few levels here we can look at for the low of the range, and we've got just one big level up here. We're not going to consider this here. Why? Because there's not enough space. Okay, so essentially what we're going to do is mark up this zone here as the high of our range. Okay, and we're going to mark up the low of our range, which I'm going to mark up as down here. Because if we get in on any of these V shapes, there's not enough space. There's too many obstacles in the way. Here, there's a clear run to down here. Okay, so this is our range that we're going to be trading from. We're waiting for price to break and close above one of these areas. Okay, so let's play price forward and see what happens. Okay, so price breaks and closes above this zone, it comes back to retest. We hop in based on the retest and rejection at that zone, and we target 1 to 2 risk reward ratio. Okay. Now we would then go break even at 1 to 1. I just used this 50% tool like I showed you before to mark out the halfway point, which is roughly over here. Okay, so we're waiting for price to get to the blue line so that we can put our stop loss at entry. Okay, and there you go. We take a win, and that is a 1 to 2 risk reward ratio. So if you risked $100 here, you would have gained $200 here. If you risked $1,000 here, you would have gained $2,000 here. So let's hop on to the next day. So as we can see, the 4-hour zones are still the same. They haven't changed. We haven't broken past any of them. So we're still trading within the same range. We are currently here in price right now, and we can go up and we can go down. There's space for both. Okay, so let's hop down onto the 5-minute and look for our 5-minute range. Now, what we're looking at currently is price pushing down and pushing up and creating these V-shaped zones like so. Okay, so what we can clearly see is that there's a 5-minute zone right here. Okay, price tried to push past it and wick past it. And so that's where we're looking at currently as our 5-minute zone of price. Okay, and as you can see, price has broken out of here. Okay, however, this is before the open. Okay, so I'm waiting for the open to play out. So let's give it a couple more candles. So you can see we've broken out right here, and this is on the open. So we would have hopped in right here after the open as price retested this particular zone, okay, with a 25 pip stop loss, and we're looking to go to 1 to 2. Now we put our stop loss at the break even point once we get to 1 to 1, okay, which is roughly over here. Again, I'm using this GAN box with the 50% so I can see the halfway point. Okay, so we push down aggressively, go into some drawdown, and then push back up. And then we're looking for price to push. Okay, price then pushes. And we get taken out at break even. Now, this is a very, very frustrating trade for us because it got within inches of our take profit here and came back to break even. But this is the importance of risk management, the importance of managing your trade so that once you get to the 50% point, you are placing your stop loss at the entry point. Okay, very frustrating trade day for us, inches within profit. And it came back to the break-even point, but it kept us safe at the end of the day. So let's hop on to Thursday's price action and see how that trade played out. So on Thursday, you can see we're still within the same 4-hour zones. We're getting towards the top of the 4-hour zone, however. But if we're looking to get in on the 5-minute and we've got enough space to get in and go break even on our trade, so roughly 20 to 25 pips, we can then continue with that trade. So let's hop down to the 5-minute and see what transpired. So on the 5-minute, you can see that price is breaking above the structure here. You can see that we've got this V shape down here, this V shape here, and this V shape here. So what we're going to do is use this right here as our top zone, which is busy breaking out. Okay. Price is busy breaking out right here. Let's just make sure that we've got the top there sorted. Then what we're going to do is enter as price comes back to this zone. Now, what we do, like I've said previously, is we want to see price come down and start to reject. And so in this particular example, we're going to hop into price, and on this particular day, we hopped in as price came down and retested this zone. We're going to hop in with roughly 20 pips because here you can see that there is enough to cover this zone. There's no big zone to cover here. So we're not going to go for a full 25 pip, and we've got more than enough space as a result of the small stop loss to get to a 1-to-2. Okay, so we're then targeting 1-to-2 risk reward ratio. We're then going to go break even at 1-to-1 risk reward. So we can put in our zone here. That's our break even zone. And we're targeting 1-to-1, 1-to-2. So price then comes back for us, tags us in, and in one candle tags us in and tags us out at our profit area. So Thursday was a winning trade. And then let's have a look at Friday. So Friday was FOMC, so that is a no trade day for us. That is an event that you don't want to be trading around because the volume in the market is extremely low until FOMC is released, and the market is pretty much completely unpredictable. If you trade during FOMC, you are straight up gambling, so we are not touching it. So that was a full week's worth of backtesting our strategy. All of these trades were taken live as well and are recorded in our Discord, which you can join down below. So thank you very much for watching, and I'll see you folks in the next video. Cheers, everyone.